So these are the rankings. Um, oh, the indexes. This is where the real mess is. This is where the mess right now is. Here we have an S&P 500, which has a daily swing is up and a weekly swing is up, right? Both of them are ranked 3. Now look at NASDAQ. S&P is sitting here, and look where NASDAQ is now. And look at this. And look at Russell. Daily is down, weekly is up. We want to focus here more. I'm not worried too much about daily swings. They change, much faster than this is where the trend is. Look at Dow. So we have NASDAQ, and now we have semis. And we just looked at all those memory names, the one I just showed you earlier. So S&P is trying to rally based on what some value names and how far you think that thing is going to go. Because NASDAQ right there now has 3 weeks of lower lows. Bearish engulfing candle, doji, and even put another low this week. So the only way this thing will move, like meaning that it will flip back up, it has to go right back to the highs in the next week or two. See, the ranking dropped too now because this week was the pink candle, not 3 anymore. This is still 3 because it's all blue since April 17th. So whatever these 5% for this 5% dip that we had 4 weeks ago, and then we got this, that was a doji, that's another doji, that's the lower bar, that's the higher bar, that's another higher bar. So it needs 3 weeks of lower lows anyways. But the point that I'm trying to make is how you gonna fight this? You know, when this is not where you're gonna be able to line up the wave count anymore. So forget about Elliott wave because when the swings doesn't match, your wave count not gonna match either. How you gonna make that work? You have a direction of a swing on this side is down and one is up. So you just want to take S&P to the moon and okay, what about this? Something is gonna happen in a week or two. I don't know if these earnings are coming up or they're gonna be fully baked in. Because what I see is this, that next week we have CPI and earning starts, right? So it depends. I mean, a lot of these bank stocks, they pop. They always report first thing in the morning in the pre-market. And by the time the market is gonna open, the stocks goes pretty much flat. You know, most of them are. So then the week after that or so is gonna be the rest of the And we have Netflix as well, but Netflix is nothing, not beat up stock, anyways. Um, then the rest of the Mag 7 is gonna come. So we're back to the same thing, any new position that you will open next week, that it means it comes with the earning risk. And those stocks depends when they report, they just don't explode to the upside because the earnings are coming in. You know, the implied volatility will rise, and the stocks just most of the time just kind of sits and just kind of kill time. Closer and closer it's going to get to the earning date. That's where the stock's trying to get, um, because the option market price and all the the implied volatility and things like this, so they're going to jack up the premiums and things like this. So yeah, this is going to be a little more selective and a little more picky, because any position that you have, well, comes with a full package now. Well, every time, I mean, every quarter is the same way. It's nothing new. It's not like the first time we ever all gonna experience earning season. But me personally, I literally hate them, because it gets your your setups become so selective, and then you always have the thing in your head is that I'm in a week and a half, 2 weeks from now, I have earnings coming. Uh, you know, I will have earnings that I have to deal with, and those full size positions. I'm not. I don't. I don't mind holding one or two contracts if I have to take it into an earning trade or something. Yeah, but I'm not sitting here risking two, three, 4 grand on earnings. And no, 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 thanks. I don't want that. So we'll see. That's a pretty very messy read. This one got a sell signal last week. It just sell there. These are pretty powerful sell signals. Just just keep that thing in mind. Yeah, they hardly disappoint. Some got them here. That's a pretty extended move. 14 weeks, 18.3%. Look at this. Same thing. Daily is up, weekly is down. This is the OEX, tracks all the S&P 100 stocks. See, both of them are down. This one turned down this week. Bearish engulfing candle, sell signal. Last week, lower low. This week, lower low. Ended the week with a doji. That's how semis ended the week. The yellow highlighted candle is the doji one. QQQ, same thing as the NDX, of course, side by side. Daily is down, swing is this one is down. IWM, same thing as Russell 2000. Daily is down, weekly is fine. Technology, same thing. Both of them are down, following the same thing, QQQ. So that's the thing, though. Like, if money is rotating out of these memory stocks, is it gonna go into those actually Mag 7s? But those Mag 7 stocks, that all of them have earnings coming up. So that's where the next move is gonna happen. This is financial. See, financials are strong both ways. XLY, this is a nightmare, complete mess. Consumer staples is okay. Got a dip, just sideways chop. Energy starting to recover from the bottom up. Still down here. Healthcare is fine. Daily turned down yesterday after 3 days of lower lows. See? First low, second low, third low. There goes your swing. Now you gotta have to understand one thing though. Once the swing turns down, it doesn't instantly goes right back up. Always remember that. You don't just, this is not some YOLO market. You come down 3 days, you go up 3 days, or you come down 3 weeks when the direction of the swing turns down and you go right back up 3 weeks. It's not how it works. I'll show you an example. Look at semis. Semis took a dip, right? Here's your low. First higher bar, which was Wednesday, Thursday. Look what happened yesterday. See? This is what I'm saying. If the price would have pushed up above 618, the daily swing will turn up. You see what happens? Took out this 604. Boom. Now it doesn't count. Now it has to build a new sequence of another 3 bars in one direction. This is what I'm talking about. When the swing turns, it doesn't instantly rips right back up. It takes time. Same thing here with the weekly as well. You don't just down 3 and up 3. Those are, it can happen, but those trades are very low probability trade. So right now the setup on this one is you're basically taking this low to this high, and that's your fibs. That's it. So right now it managed to recover to 50%. So can from 611 close, can next week can be a higher weekly bar? Yeah, sure it can. So can the stock can be up from 611, can go up to 620, can go up to 630, somewhere around here. Yeah, that you can get the bounds, but that will consider as a 1 week of higher bar. Then you need 2 more weeks after that, unless the first bar appears here next week, and then the second bar goes up like this and takes out this high right there, then the direction of the swing will change right back up because now I made a higher high. Then you don't need 3 of them. If the second one can clear this, the all-time high. It doesn't usually happen, but anything is possible. I know I've seen a lot of reversals, but once you put 3 weeks of lower lows, the point is that you don't just go right like this. It 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 takes time, you know? So you just have to understand. You have to count a sequence. You have to mark the high and the low, right? Because you guys don't have this. You simply take when the week just ended, okay? Yesterday, right? So this week low is 566 and the high is 618. And we close at 611. So next Monday, from Monday until next Friday, you're gonna watch 566, and you're gonna see 618. And now you're gonna see like, okay, which way the price breaks takes, so it's gonna take out the high or it's either gonna take out a low. Let's say if it managed to clear the high, then where we have the resistance? We have a resistance at 619, we have a resistance at 631. So you look for this range. And so now you know that the direction has been down, right? But you have the the niche, like you can just basically you just like I want to buy every dip and any dip is gonna come and this and that, like those kind of a hopes and dreams. So it doesn't mean that nobody can, that you cannot structure a trade from here to here. You can, right? The price can pop here. Yeah, of course, it will reward everyone. But you have to understand one thing, that you're fighting this. Can this move can extend to 650? Of course it can. So your range is from 611, depends how kind of a strong the move is, the bounce is, it can go up to 649, 650. So you're roughly talking 650 minus 611, that's 39 points. That's a hell of a trade, right? But you have to understand one thing, that you're trying and hoping for that 39 points to grab, right, to the upside, but you're fighting a downswing. And these are the ones that if the price does rally, those are the ones that just gonna end up with a wick or something. They'll reject, they will reject pretty quick, because price is calculating higher highs and higher lows, and lower highs and lower lows. That's what the swing trading is all about. It doesn't have any buy signal yet either. It's sitting that got hit with the sell signals up on the top, right here. Got a sell signal. Got the bounce. Got another sell signal. Got another flush to the downside. You see? It's it's it tells you right there. So it's not necessary that 100% the guaranteed is going to play out. If that's the case, I mean, shit, I can, but it's definitely worth watching every time we especially get something on a weekly time side, you know, I always pay attention to those. So dollar right there. See, dollar got a buy signal triggered for yesterday. Put a hammer here. That's a daily bar. Put a huge hammer here. Weekly is fine. But the overall trend of the dollar is down anyway. Look, this entire dip. And dollar under price at dollar is fine. Gold, weekly is still down. So now the gold had a one bar that was actually the inside bar against this low. And this week, gold put another higher bar. Now, next week, if gold takes out this high right there, the weekly swing will turn up. So we're gonna watch this one. If the gold is ready to move. Bitcoin, same thing. Inside, higher bar. So I need to see if Bitcoin can put another high next week. So that would give, see, the ranking is still 0. If it turns if it goes up, one makes another high right there, you know right away that ranking 0 is going to turn into a 1. 1 means what? Is going to turn into this golden candles, right? The golden candle tells you what? Your trend is still down, but the swing just turned up, right? So these are the early improvements that tells you the trend is down, but the swing is up. That's what the watch list. This is when we start watching. So we're gonna see, okay, how do we see where it is on the rotation? Look at that. So now you see like, okay, the swing is up, right? And then you know it's a ranking 1. But then when you come here and you look at this, now you gotta ask yourself this question that you think that deserve my capital? You need trading decision before you enter a trade has to pass multiple tests. Okay. How does it pass multiple tests is we need swing to be up, we need stock to be sitting in the improving quadrant. That is improving, not here. But if the swing turns up, doesn't mean I'm gonna jump on those. You know, that just I'm still gonna you're still gonna be playing a counter trend move anyways. Look at the band right there. Yeah, playing bounces versus trends, they're two type of different trades. And like when I put out a trade and I tells you what we doing, right? Like that's what this is. I hear like Tesla, it's just a counter trend trade. So when I write something like this is a counter trend trade, now those are the trades that just gonna last like 2, 3, 4 days or so. Can last. Like, I can depends how quick that we can get a pop. This is not something that I'm going to hold. I'm just watching a certain fib is where like 61.8 or a 78.6 is if the price reaches that zone or come to the test to that certain fib, is where I want to take the entry, is what I call those counter trend moves. Those counter trend moves like, okay, price came, tested the 61.8, held, bounce. So we're just trying to play that bounce. And the bounce can be next day, it can take 2 days, 3 days, 4 days. So it depends how it progress from there. And if I could if the trade's starting to move up and if I manage to make 7, 8, 900 bucks, boom, done, I'm out. You know, I know at the same time the the daily swing is down and the weekly swing is down. So what kind of a trend are you even talking about here? So this is Tesla, which has a ranking 2 on the daily and has a 0 ranking on the weekly. You know that from 0 it has to go to 1, then 1 into a 3. Because ranking 2 is only a pullback. That only applies toward the uptrend only. So it has to go into this is a complete mess. Look how the stock is actually trading. 1 week down, look, one week down, 1 week up. 2 weeks down, 1 week up. 1 week down, 1 week up. 1 week down again. You see all these rejections? Look at these wicks. Every pop on this stock sells, fades right away. Telling you, one, two, one, 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 one. We've been hitting Tesla left and right. We did two trades last month. I think one this month so far. Doing, we're doing good on Tesla. I don't complain. All I'm doing is just trying to play these counter trend moves. So we did one Tesla here this month so far. And then last month we did this one and this one. So we did two last month. So 698 to 873, 640 to 750. So we did two rounds last month, and we did only one so far this month, right here. You know, so and we're trading this week up, week down, week up and week down, every single week. This week it closes the week with the inside week, as you can see. So it didn't really move much. Still put one week down here, but it ended the week with the inside week. See, because it didn't break the last week low and the high. It just stayed in between. It just stayed in between this range. These are just Netflix. Netflix has earnings um coming on whatever Wednesday or something. Look at the stock. The stock is making lower lows, right? So Netflix can pop from here to here if like let's say I don't know what the ATI is on this one, 6 points. Stock moves on the average of six. They're going to be a 6 point move. So where we at now? 73. So you're looking at 73 plus 6, 79. So you're looking at a move from here to here next week. So you're I mean, I don't know if you the the earning lotto that if somebody has an itch, you either 70 puts or 80 calls. That's it. That's the depends now. Either it goes this way, because if this thing breaks, your downside next stop is 66. I'm looking at the other screen here. So your downside is 66 from here, 73. Okay. Your upside is from here is, let me do this, 70, 86. This low is take you down to 66. And upside is 83, 87, and 91. That's your upside for this month. and Netflix. So that's what I said is 80 calls is your lotto to the upside, and lotto to the downside is 70 puts to the 66. That's the trade. Now, which direction the stock is going to swing? Well, I don't know that. And nobody's going to tell you that either. They just they were lotto play, that's all. Meta, nice week. Um, Meta is another kind of messy chart as well. We can just go this way. As you can see what the stock is doing. The the 3 weeks, you can always pay attention to the number of weeks and the price, the how much the what the percentage swing is. 3 weeks, 3 weeks, 4 weeks, two, two, one, two. You see, like you can see two, three, four, one, two. How see how the sequence is going, right? It doesn't mean like that this is the thing though, because last time Meta rallied from here to here for 3 weeks was 32.9% move, right? So what happened was one, two, three, swing turned up, line turns green. And look what happened. Inside, lower, lower. Instantly reverse right back down from this low. Then rally back up. You see, I will do another trade on Meta. We did one leaps that we bought. The I closed them because I don't know what I made. 40, 41 went from 515, 6 would have probably would have worth way more now. 22. So we closed that one for this month and captured this probably close somewhere around here. So I'm watching. Um, just kind of gives me more confidence if the swing is up, and then we can buy a pullback. Those are the ideal setups. It's just if the direction of the swing is down, it's down. It's just hard to fight the upside. You know, Google pulling back, it's kind of choppy as well. See three, one, one, two. So it had a huge move up. Just trying to kind of like this little setup here. I'm watching this one just to see if something can form like this, you know. So I'm watching this one. So you might take a shot at this one. Amazon, they don't really like this one yesterday, but we'll see. I'm gonna watch this one. See, a lot of these stocks had advance, as you see right there. Look at Amazon, see, same move. This entire move down, and then we have Google and Microsoft is a complete disaster. I went all the way back down here. Apple is the one that just made a full V-shape reversal. NVDA is the one that we're trying to trade this one twice, right? Still a pullback in two, and we just pick an entry here. So I like this one, and we did a wave count on that one on daily time frame, this one. So it held the higher low pretty well. Um, All-time high 696, three-wave decline, WXY. It's labeled as a complex because too much overlap. That's your low 520. The initial swing high 691. Deep retracement all the way down to 78.6. Try you see like from here, this is where the buyer actually showed up. And this is where I picked up that leap. As you can see, as you remember, if you remember that, and that's like, well, I'm gonna take a shot here at 78.6 to see what happens. So that was the same leap that actually ended up paying us. So that was the move that we played this from here. Then got another ABC down. And then from here this week, it made a move back to a measured move, which is this 670. So 670 and this high right there is 691. So this is a first zone. So this zone right here now has the resistance coming down here, as you can see from the channel as well. So it hasn't tested it yet, right? It might it might just wait till earnings comes out and then kind of if Meta kind of takes off, right? They need a strong push from here to get rid of this tilting channel, which has been from since last August of 2025. We're in July right now. Next month is going to be in August, so it's going to be a full year. Okay, so if you're just going to take from this August high to go all the way here to this, from this August right here, that's one full year of a price action right there. Is it ready to go up after a year? Well, we'll see. So for 1 year, it's just been chopping around like this. So we're just trying to see if it can do this after a three wave decline. So I'm gonna watch this. I hope it can kind of pull back a little bit or something, but at the same time, we have earnings coming up as well. So don't forget that. So I don't mind taking a shot at earnings though. I don't know. I'm gonna check and see when they're gonna report. So that's Meta. What else we have? NVIDIA that we're doing is I try to a 1 hour chart. Low at 189.80. Kind of the 1, 2, 3, 4, 5. This has so much. I put them as a triple combo all the way down to 78.6 deep retracement. And then from here, so you have low, higher low. I took this trade is because I saw a daily signal fired on this one. And I posted this on to YouTube. I gotta scroll up and find this. So when the price was here that day right there, it's just when this daily signal fired right here. This is still under a sell signal on the weekly because the weekly is down anyways. So then I was like, okay, so let's go with round one first. So every time when I'm trying to squeeze or scale something here, I know what is this side is doing. So that's why I always have side by side. So I will know like, okay, if I'm trying to play a counter trend move, or I'm going to take a trade here, and then I'll see if I could write this thing up. So I prefer here weekly, but for timing and stuff, daily helps as well, just to execute the trade. So can it advance? It's been going good. So we'll see what happens. Three versus one is we have 209, and then the 200 is 213.58. So that 213.58 is this prior resistance, the 213.99. So we'll see now if where does this third ends, then is going to be due for this kind of a setback and forth. So then what we're going to do is we're going to move this thing back here, right? And then whatever this third ends, then we're going to have to suffer this. Nobody knows which way is going to go because this was a pretty choppy triple combo to the downside. So if this fourth wave managed to stay above the 200, and you look for one final push to the upside to complete five waves, one, two, three, four, and five. So it could work out, right? So, so the trade that I have open now, can just let the thing work. It's gonna have a couple whipsaws here there, which is fine. We got plenty of time. Um, Earning wise, it is always the last one to report earnings, anyways. And the only reason I'm after NVIDIA twice is because of the rotation. Okay, like here, you see, like everything else is trying to take a breather. But look at this, NVIDIA and Broadcom starting to show they're they're not part of this group. So that's why I'm attacking NVIDIA this week twice than any other stock. So these are the things that helps, rotation here in the improving quadrant. We had a daily buy signal, you know, here rotation is improving. These are the trades that you want to enter, you know, because if the price does make a lower low, okay, well, rotation is going to fail. And this is not a market that you can wake up on Monday and think of a stock and this stock looks good and this stock has a good story and okay, good, fine, excellent, great story. I love it. Love to hear about this company has a great future. This company is going to become this and this market cap will turn into a trillion, two, three, $4 trillion or whatever your dreams are. Fine. That's all good. Show me a higher low, whatever you want to buy. I'll buy it with you. Show me a rotation first on any stock that you want to buy and show me a higher low. And we buy together. The only two questions that I have. There are tons of stocks, you know, that the that you can trade back and forth. But we need higher low. Low, I need this. Show me this. Then we have a good story. If you have a stock that is doing this and you buying because first that that you're desperate. Second is that you think that it's just what you think. You see, everything what you're doing right now, you're just thinking. That's these all your observations. You think the stock is cheap, I should buy it here, and then just hold my breath. Months and months after, you're probably thinking like, okay, here comes a pop of 15, 20 points. You're gonna be all super excited thinking you called the low. Would you rather wait for a structure to build, or you just like sit down and just hope that this is the low of this stock, of this entire dip from there? So if you trade based on hopes, or if you trade based on dreams, yeah, those kind of a that kind of a mentality and that kind of a trading style is not going to take you too far. I can I can guarantee you that. Those are hopes and dreams. We enter when we have a structure in place. Then I'm going to take a shot. I don't care about lows. Who cares about picking bottom? I've nailed a lot of bottoms in my career. You all know that. Well, that doesn't mean or tell me like, oh, I called the bottom on this and that. Just, we need this. Higher low. Show me higher low first and rotation. Then we'll buy. I'll buy with you. Broadcom. Sell signal. Weekly swing is still up, right? But it has a sell signal. So fine, got a bit of a bounce, 10% upside for the week. We need green candles, right? Momentum is still buyer showed up, but there's a buy signal here on the daily time frame. See if the price can advance a bit more. But the only downside here is it has a lower weekly monthly bar. You see right there, it took out this low. So your month is gonna stay down for the whole this will stay down. So it has a pretty this is a 38.2% retracement. Hasn't really tested yet. Might make a move here to this. So that's your daily roadmap. But the weekly here is it has to build, you know. So something like this. You see, sell signal here, chopped around and stuff. Waited for this, waited for this week right there for trigger this buy signal. And then from there kind of advance to the upside week after week. So just unlock the stock anyway. I'm not worried about it. Stock has plenty of upside. High or low. I did this the hang on, let me see if I can. It's nice. This one. It's typical see, oh, these are the ones that call on the bottoms. And buy the like we need higher low, you know? Those are the ones that you see right there. So NVIDIA had a pretty good week. Momentum picked up, rotation started to improve. It needs 2 more weeks of higher highs now to see if the swing can flip. So so we'll see what happens. 213, 218, 226. I mean, depends how advanced, how far it goes. And we're gonna find out. Um, Nothing in these mineral and all that stuff. I haven't seen nuclear that disaster. Nuclear stocks are all horrible rotation on those. Then you have minerals, same thing, just dead money. Then we have space, another one, nothing here. This was chips, the ones that we're looking at, Broadcoms and stuff. This is the weekly rotation, see? Look where the NVIDIA is going in the weekly rotation, Broadcom, what is the... It's not that much money in these stocks. That and these GFS, they're all starting to show signs of weakness. These are the ones that went wild this year, right? Intel is here, Marvell, Micron, ARM. Look how they are. None of them now has the pointing tail like this anymore. See, they're all turning down. And don't expect the stock to run 3 straight quarters in a row either. Remember, I talked about this thing many times before. The ones they have the 2 down quarters are the ones that you should be interested in a third quarter. Remember the rule that I told you about? Third quarter isn't updated yet. Focus on Amazon, focus on Google, focus on Microsoft, focus on Meta. So these are the ones you're gonna have to focus on more. These 4 names in a Q3. Because these four stocks are down 2 quarters in a row. So we're gonna gain something here in the third. NASDAQ in July looks, I mean, it's pretty damn promising to be honest. It's a pretty strong month, seasonally by business. I don't know if they're gonna let it happen. Look at July, how strong July is. NASDAQ, Russell is okay. Semis is decent. Chemicals, usually semis take a hit in August next month. So when I was looking at this, I was working on is the semis to go this way for the month, and then this leg takes it down in August. So I'm watching this. So you have 1, 2, 3, 4 diagonal 5, and then you have 1, 2, 3, 4, 5 A, B, C. The weekly swing is down anyways, so I'm not gonna show any upside. If the direction on the weekly swing is to the downside, yeah, you don't expect or look any upside. The direction of the swing is down, so start looking down now. Okay, there's no point to look anything up when you know if the direction of the swing is down anyways. Why would I open a wave count to the other when the direction of the swing is up? Then we'll look up and then I'll run some extension to the upside. We should keep this roadmap for now. So we're just gonna see if how the price. So right now is at near 50%. So we'll see what happens here. So this is what I'm watching on semis, is to see if after 5 waves, you get a 3 wave counter trend move. So weekly this month, this week is trying to confirm me this zigzag pattern might gonna come into a play. So I'm gonna watch this and see if we can try to short this one for this move. So if it's gonna if August right here is the weakest month, so should be go out August, September by like 2 months worth of time. So spread, 2 months out, so might be able to catch a dip. Meta looks pretty good. I have a pretty good feeling that Meta is gonna pop on earnings as well. It has a strong July. Microsoft dead, totally dead. NVDA is down. Google strong. Amazon is decent. Apple is very good. Tesla is fine. That's not messy. July is Netflix is down. Oh, this is the one we're gonna watch. Monthly swing is down as well. That's a problem. Yeah, when you turn monthly swing down, oh yeah, those are the stocks gonna struggle the most going to the upside. That's a real crack on the foundation. I know that we had this and Meta is the same. Another one is well, Tesla monthly is down as well. So you have Netflix monthly is down, Tesla monthly is down, Apple is up, I know, Amazon is up, Google is up, NVDA is up, and Microsoft is down. You know that. That's why the stock is struggling so bad. So does Meta, you know? High here, got a sell signal, 1 month low, 2nd month low, 3rd month low. Boom, there goes your month. Monthly swing down, 3 months of lower lows. Rallied up, outside week, outside month, inside month, down, up, inside, down, up. You see, is what I see from here is this is this trying to build a base. That's why the stock is so range bound. The stock is between 520 to 800. So if it can go up like this, when we don't know if it's gonna. But it has definitely starting to show me this. So we'll see. Monthly and weekly. If you just master these two time frame, watch how your trading will change over time. Daily charts are just too noisy. I don't even. I'm always doing. I mean, I know a lot of you guys are sitting watching every little tick on a. I don't do that. I have a right monitor here that I have all the Mag 7 stocks that I see, but yeah, I don't look at. I'm always making something, or I wrote made this indicator this week. So this tracks multiple layers of shows buyers and sellers, tracks volume, it tracks the previous weekly bar, tracks the high and the low, you know. So it has a bunch of conditions. It's got call it a momentum flow. I put like these different settings in there. So it has like 5 different conditions. So basically what it is like if the green line here is above the red, buyers are in control. And if the green line is trailing below the red line, it means the sellers are coming in these names. So these are not like the it's not signals. I don't need any signals here. It's basically it shows that one is the buyers that are coming in, right? So basically what we're trying to see is like who's winning the war on the battlefield, right? If the buyers are more aggressive than the sellers or not. So that this momentum flow right there is gonna give you that exact read. See right here, which is now we can just scroll this scale down to April 3rd, right? Somewhere on this week. So the next week started here and this week right there. That's when you're starting to see this line right there starting to appear above the red one. And then from there, you see the trend rallies, the S&P, all the way up till here. Here goes the bearish structure appears on a weekly time frame right there. And then what happened here, market took a dip 5% to the downside. This decline right there. And then from here, as you can see, buyers are this now right there. That's your crossover right there. See now these are sellers now because now we're below this red line. So now we're getting right back above it. So we're gonna watch this and see The sucker might just break out, to be honest. So we're right here now since last week. So there's definitely more buying going on, So we're just coming out from here. Even the fact that the price really didn't move much, just literally just stay sideways. And they can see the same thing here to the downside. See right there this week. Sellers are here. I actually changed this thing to plot to color and plot. There you go. Now it's going to show you much. This is when actually the cross has happens below the zero mark, up and down from here. That's when the seller comes. See, it's a very good read. Tracks the momentum flow. Very lengthy script. There's more and more. I mean, I can pretty much script any idea that you have. You just put it together in multiple layers of conditions. Those are all variables, but you just this was just huge. They look at all the whole thing. I wrote I was then you have to apply that thing, and that's what I do beside trading. Sit and write scripts. This one. This is so it has look back is and then it's looking for five previous bars and ATR. I put them in there. I always pay attention to ATR. You should always look at ATR. It's very important. Open, high, low, close, the exact volume, and so we'll see. Kind of gives me a read on a price to see who's winning the war. That's what that's for. That's what the momentum is. Momentum is what we need on every trade on every trade anyways. This is what the speed is, right? We don't want to sit in a dead trade. So there are 25 stocks this week. Their swing turned down, which are these ones right here. We have Ralph Lauren, Western Digital, SanDisk. So they all have 3 weeks of lower lows now. NXPI, this whatever, MPWR, Micron, Marvell. So these are all these semis, DE connectivity, whatever. So when the swing turns down, it's got it takes time. So it doesn't mean that it cannot pop next week. It can, but it will need 3 weeks of higher highs for the swing to turn back up. Remember that. These are the ones that the swing that turned up this week. Apple, Datadog. So we can export this, open a watch list. So now these ones, why should a bar type? Anyways, so these are all swings are up now. right there. This one, oops, this one right there. Here's the outside bar, higher bar, there bar. eBay, Apple, yeah, because it took a 3 weeks of higher highs. Bearish already did those yesterday. Tier ranking in a 1 and 2. Tier 2 trades are these ones. I mentioned this one, DHI. I was kind of thinking about that one. Then I end up going with 3M. I open a trade on this one. Still a good setup. These are all the tier 2 trades. These ones. So if they can advance toward tier 1, that would be nice. So just we have EXP, Berkshire Hathaway, CDW, DHI, DR Horton, MMM, IBM, 3M, Tesla, Uber. I'm watching Uber and I'm thinking, I don't know if should I take another shot at it. This pig is so last trade was so freaking brutal. I don't know if I wanna. I looked at him yesterday and you can just open. I am getting a fucking bar type here. A bar type. Hey, okay. There you go. So these are the stocks. They're in a tier 2 right now. So they're all improving. That tells you exactly what the rankings are, so we can filter it by this. It doesn't matter. So every single, this one actually, these are the ones that turned down as an update. Okay. Yeah, I gotta wait for this thing to actually close. Yeah, because Tesla swing is down. Shouldn't. Oh, but they're in tier 2. Never mind. I got it confused. These are only a tier 2 trades. They're all improving quadrant, but this one has the swings down. Yeah, we don't, not interested in those. You only focus on the one that actually has a swing up because you want to go up. So this one, M3M, that's the one that we took like this. So now if you put a Tesla here, going around here, this and this. Now one has a swing up, one has a swing down. So I'd rather just go with the direction of the swing. So I like this one as well. DHI right there. there, low, that's your high right there. That's freaking deep. Higher low, higher high. Now we're looking for higher low in this area. What would be the next step? Higher high. It's just a sequence. It goes up. This is structure. What you go. You buy the higher low and you exit the higher high. It's the swing sequence right there. Now why I like this one. Now why I like this one is swing is up. Stock is in a tier 3 ranking. So what we need is blue, right? So condition 1, condition 2, rotation is improving. That's condition 3, right? So F3. So when these three lines up, higher low, structure, rotation, which is the capital money flow, and the direction. This is the trade that you want to open. Now, this stock, right? Swing is down as a sell signal, but the rotation is improving. So it check mark this, but it doesn't check mark these two. So no structure, and the direction of the swing is down. So why in the world would I buy this? Because I found a good tail looking pretty damn promising on the rotation graph. So this is what I said before is rotation tells you where to look. Structure tell you what to trade. Signal will tell you when to execute the trade. This is a three-step, three phases. We run a scan to see where the money flow is, right? Which quadrant the stock is in. Is it improving? Good. We want the stock to be sitting in the improving quadrant, either a tier 3 or a tier 2. So we got that. Now from here, we need to find, the next thing we need to find is a structure. Structure is what? Higher low. Not a higher high, higher low. And the third thing is what we need is what? Signal. What do you think your odds are failing in this scenario? Very slim, right? That's why we win so much. We don't just blindly buy because one guy on a Twitter can post something. Okay, good for you. It's a process. We want to know which stock actually deserve our capital. They're all looking promising right there. How many of them are going to advance to tier 1 into the leadership phase? Time will tell. And how many of them will fail? Time will tell. But the point is this, that this is not a trade. You don't just buying something because something is moving up like this. Rotation is all about the money flow. It tells you where to look. I set it up that way, and then we filter the list of stocks to see which one we're going to trade, which one has the right higher low structure setup. Then we look for a signal. Then we execute. It's a full process to open one single trade. I'm not gonna throw three, four, $5,000 into a position just because the swing is up and it has a higher low. Okay, fine, but I need to see a rotation as well. So there's there are a lot of stocks that in a lagging quadrant, sitting in a lagging quadrant, but it has the swing is up. Yeah, and you want those? I can show you those ones if you want me to see. Let's say we want to find stocks that pulled 50% with the swing up. There. So it took what, 3 seconds. There you go. So now these stocks that just came the pulled up in the next 3 seconds. Now the conditions on these ones is the swing must be up, okay? And the stock has pulled 50% retracement of the swing low and high. So now you look how many of them are here. Here, this PPL, right? Swing is up, down to a 50% retracement, but it's sitting in a lagging quadrant. Look where the stock is. Here. You see, like, now I always look at it as like, okay, wait a second. Structure is there, but not the rotation. You see, my point is, it's the process you got all have to understand. Why I like this one, DHI. Remember I mentioned that one yesterday, 2 days ago. Why I like this one? It checks out everything. 50% retracement, swing low, swing high. Here's your this ranking three, which is blue bars. That's exactly what we want. Stock is trading above the trend band, kind of poked here, but kind of back close right there. Still green. So the trend band is here. Direction is up. Ranking is 3. Stock is an improving quadrant. This is what we want. Now we want to see this, we can, but we don't have to because I already filtered. There you go. So these are the trade that has a potential for the rotation to improve as long as structure holds. If the structure fail, that rotation that you saw there is going to take a turn down. This will fail as well. So I look at a lot of stocks when I run a scan. It doesn't mean I'm going to jump on them, like Hilton right there. Okay, good, huge run, getting hit left and right with these cells. Look, sequence. Higher highs, higher lows, higher highs, higher lows. Structure is there. Not denying that. You know, Stock looks like typical like normal pullbacks are 10%. 4 weeks, 13% decline. 3 weeks, 10, still kind of lingering around here. Swing is still up. Fine. Direction is up, but not the rotation is not there for me. Can consider this. It's a very expensive stock. Stock is weakening, but it's not in the lagging though. You know, these are the ones that you could are the good ones. These are the ones the stock had made a big, huge run. These are the ideal pullbacks. See the stocks, they're still in the leading quadrant, right? But they just pull back right to that condition. This one right there, we can do a swing high to swing low. Get your 50% retracement. See? So now Qualcomm, we go here, it's right there. See? So that's the pullback people, like I hear about, I want to buy a pullback, I want to buy a pullback will come, it's going to show up on my scanner. Will tell you exactly which stock is on a pullback, on a leading quadrant that already had a run, which is this one. That's your pullback. Because if this thing's starting to go like this way, and then that rotation that you've seen up there is going to start coming down pretty fast. Look at that trend band right here. Swing is up, leading, and the direction and the swings, is all positive across the board. That's what I'm trying to say. This stock, another one, and this one. There's only three of them. I mean, I can give, or like, I don't do that, and I wouldn't want to do it to anyone either. So I can have no idea how many trades I see every day, every week. It's crazy. Full 1500 is going to pull up all the small cap and mid cap. I run them, and I filter them and see like, okay, which one check marks 55 of them. Takes less than 5 seconds for me. For now, with the ranking, it instantly see like, okay, there you go. Which one I'm interested in? These ones. That's my list. The stock that I'm interested in. This one, this. Oops. This, and this. That's it. I don't want none of the garbage in a weakening. I don't need any of the stock in a lagging. That's my list. Open this. There you go. These are the ones that are still in a leading quadrant, and these are the ones are in the improving, heading toward the leading quadrant. So this is where we're just gonna look. Fine. Close that. Now we open structure. Click number one. Pull up the weekly layout. There you go. Here comes your structure. Swing low, swing high, higher low, higher high. So here's another one. Lindsay Corporation. This one's gonna pull up some names because this one pulling up the mid cap stocks and the small caps, as because S&P 1500 has all the 400 mid cap stocks, small cap 600 index as well, and 500. So that makes it a 1500 S&P index. This one improving, swing low, swing high, try your fibs, 50% retracement down this your zone. That's your entry zone right there. So now you're buying a higher low. Now you're buying a stock as a direction is up. Now you're buying a stock is in a improving quadrant. So why wouldn't that's your trade? Rotation is there. If you already looked, structure is there. And now we need to see if this thing matches here. Weekly is fine. Daily is the one that we're trying to see if where this pullback will stop to see it makes a move back to the upside. Huge run off the lows. Doesn't move much. On ATR. I like this one. Eagle material right there. This is the good one. I thought about opening a trade yesterday and then I was like, just wait. This one is, I might get into it Monday. This EXP is an Eagle material. So that would give you a stock in the material sector. Um, this one is we already ran a scan, so that's the watch list is actually narrow, filters everything from the scan anyway. So this is your quadrant improving, swing 3, ranking is 3, direction is up as your higher low. That's your swing high and that's your swing low. That's what the battle is. So the plan is when if it's fine support here, whatever is gonna happen from here is to break this. Swing high to make a higher high. That's structure right there. So all we need is this. We need it. We need initial swing low and a swing high, and we're buying a higher low. And we want to go up. This is what we're looking for. If this thing breaks, structure failed. Rotation failed. Price goes here, band turns red, and that's it. No harm, just okay, fine, we'll find another one. But the odds of failing is not very high compared to winning, let's just put it this way. I'm not attacking these ones, even the fact that the structure is there, but not the rotation, so I'm gonna pull up this and this. Okay, these three, fine. It needs to check back the there. See, they're all sitting in a lagging quadrant. These are like tier 4 trades. They have a very high probability of failing because they're weak. Momentum is very weak and they're underperforming the benchmark anyways because they're, below the 100. Can show you. Okay, here, put a 21 over it. There. See, it's underperforming the benchmark. So you see, like, not every high low deserves the capital. That's like, okay, fine. We want to see the rotation. The first step is rotation. Rotation, structure, structure, signal. Those three things has to check. And not every stock is going to check that. So that's why I'm just not even like when I do this, I write them on this on the full thing. I just basically just pick these like this. I'm not even interested in the other ones. Just just check mark these ones and just open up a new one. That's it. I don't need this. And I don't need this either. I brought these stocks here. That's my hunt zone. There you go. Now all I need to do is to use like if anybody's saying that I cannot trade one stock out of here or two, let's say I have that many, how many? 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 stocks. I mean, I don't need to, I mean, it depends on the ATR. Depends what what the heck is ATR? Like this stock has 17 points ATR. This stock moves. It's a good beta stock. So the point here is like, okay, my ranking is good, direction is fine, it is improving. So how do I set up a trade now? Stock is at what? 210, near here to 50%, right? I'll just simply open up a spread of these two prices from here to here. So if we're to round it off, let's say you can call it 220, 230, 220 and 230. The stock has a 17-point ATR. So stock moves 17 points every week on average, right? So you just that's the trade right there. Now the question is, can stock come back down? Well, always possible. Is building that higher low. If I'm gonna buy myself 60 days worth of time, right? Which I normally do most of the time. Sometimes at 40, it depends on how the sometimes 45 days, 60 days. So I have enough time. I don't have to worry that much about the time decay on the spread, right? It's gonna have a very, very small. So I got plenty of time. And if the stock can make a move from here to here, if I manage to make 30% on my money, then was a bad trade. Two trades of 30%, that's 60% return your money. Instead of you sitting hoping for to make 60% on one single trade. What are your odds for that happen? Not every stock is going to move like Meta every single week either. I'd rather take two for 25 to 30% trade and just stay consistent and just keep moving. Scanner is not going to stop. you know, these are the weekly ones. If I want to go a little more aggressive, I can go to a daily scan. I can start running on a daily time frame. Those are going to be much faster. So these are like is what I run quick scans. I mean, I can find so many trades. I look so many of them. A lot of time I get like, should I open this? Should I don't do it? I try just to kind of keep it limited to be like stick with 500, not to go with 1500. 1500 pulls up a lot of companies that I never even heard of, right? And then those companies, that's when you go to an option chain and stuff, doesn't have enough liquidity. So that's another issue. How are you going to open up a trade unless you're just going to buy shares? That's a different thing, which you can. But the small caps and the mid cap is where we suffer with option liquidity on their chain, though. So I always prefer 500. 500 stock at least has not everyone. I'm sure there are plenty of names in there doesn't have enough liquidity, but most of them they do, right? So it's better to just instead of jumping a gun everywhere, and we can do a 61.8 pull. Here we got these ones. I can review. These are so now these ones here has weekly here. See, I already have these. I only link them because I'm only looking at them. We have this. Okay, it's a swing one. Okay, so if I'm gonna take this trade right from the start, I will know that I'm trying to play a counter trend move. The overall trend is down. The ranking just turned from 0 to 1 now. So the ranking from the last 3 weeks, okay, is 1 to 1. So fine, that's one thing. That's a positive. Direction of the swing is up. It has a move up for 6 weeks for 39.7%. And the rotation we're going to see here is starting to work its way up. Still in a very, very early phase, right? So these trades right there, they are the ones that you don't want to size up those trades. These are the ones like a tier 4 trades. It just poked her head above that line, just entering into a leading quadrant. Now the question is, can it advance? Or if the price on the stock can make a move up, right? So the money flow will track this. Structure here will tell us everything. What will happen? If the swing failed, meaning the structure fails, so does the rotation is going to flip. It's going to work. You can't have rotation improving and you have a failing structure. That doesn't work. Money flow when it comes in, something is improving, then that is gonna resume trend to the upside. So the drawback, so the downside that what I see is one thing. Ranking is one, right? Direction is up, fine. Improving, just barely making it. And I'm willing to play a counter trend move. Now I have to ask myself this question: this trade? If I do decide to take something at 61.8, try to see if I can play a counter trend move back to 80, 81, 84. Does it is this is the trade that I need to size up? Absolutely not, because I know that it has a very high chance of failing. But I'm a risk taker. I'm going to take a risk one way or another, right? So instead of pressing 3 grand, 4 grand, I'll just buy like 5 contracts. Something small to see if I can try to play this move up. If the price advance rotation improves, you can always open up, do another round two trade. I've been doing it like we in one, wait for setback, and we do round two. We're doing it lately every week now. Tesla we did last week, NVDA we did this week. We just take the initial trade, makes a pop, cashes out, wait a day, I'll watch price to pull back to a certain fib, do another round two. You know? So you can always layer those like, one and two and three. I can do those. But I'm not gonna take in a start right from the start like this because it has a pretty high chance of failing. Rest is, see, lagging. See, they're all lagging. See, that's what I'm saying. A lot of time a structure can look promising, but rotation doesn't lines up right. So it's just the overall market right now is so damn concentrated right now. It's just because it's all rallied just a bunch of few names. The rest they're just all dead. You know? JP Morgan, I'm just like looking at that one is the stock is up like 2% for the year. 4%. So I just got a little salsa. Daily always gets too back and forth. Um, because they're faster swing, shorter time frame. I always, me, I always prefer this. I don't want daily noise. Market sells off tomorrow, 100 points. It's fine. Doesn't change anything here though. The stock real damage happens here at this time frame on a weekly time frame. That's the main trend. We want to trade with the trend. We want to make sure that the price is trading above the trend band and we have a healthy rally to the upside with green candles, meaning we have the momentum. Then we can scale it and see which where we can buy a pullback. A pullback can be that 50, 61, 61.8% retracement. So we're good. Have nothing to worry about. Last to least, we actually made it here. I didn't do the the only way I'm gonna find is all here. Where's that thing went? Here. Here. So this was June 30th, no, July 1st. Today's the 11th. And we had a long weekend as well. Smaller three, four, five, two, and then from there we try to advance toward the third. This is where we got. I had left them four, five, one, two, three. And now from here is this. All-time high 76.20, sitting at 75.75. 100% relation. 100% was 75.77 from 75, right? It kind of whipsaw. 75.77. So right there. And if this is a third, then we need NDX to go with it. NDX is sitting here. So I'm like, NDX is here. S&P right now is sitting here. So how are we gonna manage to close this gap? Because I'm looking at the swings, and the same thing with the semis now this week. Very Now the story is this, that we made it here. If we take this swing low to this swing high to this higher low, the measured move is at 76, 72. That's a 100% quality, the magnitude and length of this move. That's like the bare minimum. In order to get there, we need to clear this 76.20 first. And you can only imagine how much liquidity is going to be sitting here at this price. Is where, because we had the 5% dip here. You don't just simply slice through it. Anywhere you have the largest percentage decline, at the top of it, 5.2%. This one was 3.74%. So every time when you're going to try to go up toward where you had a largest percentage decline is where you have the entire liquidity trap. Right there. So there's a lot of freaking sellers going to be sitting here in this area, which is fine. So this is the upside roadmap. The downside roadmap is if that we fail and starting to work our way down slowly, that will look like this. So it will be ABC, A, B. This is all a C, because C is an actionary wave, so we need 5 waves. So we can go 1, 2, little, I mean, 2 went up to 200%, which is fine, 3 versus 1. A little bit of abnormal kind of looking wave 4 down to 50%. And now push right back up to 5. So that completes this 5th wave. So that 75, 77 came to the same number here as well, 75, 77. The yesterday high was 75, 77. So talk about these cute fibs, huh? I don't do this much. I mean, lately, here, there, I would. Elliot is a pretty dangerous, seriously, when it comes to price and stuff. How sometimes it gives you such a precise entries and exit that it may exit basically your profits that you can take, your targets, I would say. There is pretty wild. Only if you know how to count right. You're not gonna get there if you just gonna flip flop and kind of mess around with on your way up. So this is the path, is like if it's gonna work his way down slowly from here. Yeah. So we'll see what happens. You know, I do have a hedge on, and as a lot of time, it's not something that I bottom aggressive. I like to keep it. Um, the reason why I wanted to keep it for now is is because of this and this. What I wanted to see and what I want market to show me that how much the S&P can advance on its own without these two. Because you have this putting 3 weeks of lower lows, and you have an NDX which is putting 3 weeks of lower lows. And here we have an S&P which is putting 3 weeks of higher highs. Okay. I mean, it's it's very confusing. I understand that, you know, when swings don't line up, it's gonna makes it very, very difficult. So you gotta be a little more selective and don't press trades too hard. Okay. Market breadth is opening lower, it opens lower, and then it's kind of work its way up to the flat line near zero. Then the market breadth is positive, indexes are lower. That indexes are up, market breadth is negative or sitting flat. Okay. A healthy market participation is that you want to see a broad strength in the market breadth. Okay. We don't see it anymore. Because the reason why we don't see it anymore because this freaking market only moves on based on handful of names. Okay, it doesn't move on much moves on these names anymore. You see, they're all down except for Apple. Remember those like Microsoft pops up or something, it rallies the market. You know, those days are just that doesn't exist anymore. Days are gone. This is a very selective, concentrated market. You have to be really selective and don't press too much capital either. I'm fine. I'm only trading is what I just showed you before is if it's gonna check mark my 3 bullet points. Rotation tells you where to look, structure tell me what to trade, signal tell me when to execute. That's it. These three lines up. I it deserve it the trade deserve my capital. If it does not, we sit back, wait. I'll keep running scans. I'll find trades. I'm not worried about that at all. But the overall market right now is just mm-mm. What I see right now is two things. Is that what lead us higher? Okay, this all about to start to cool off. Okay, which we can see it here, all cooling off. Right, so that's one. Second thing is even the fact that there's some of these, so that this one especially right here, Micron, the ones I wanted to see now is that how many of them are gonna start getting hit with a sell signal next week. So I'm gonna watch those. See, when you look at the see, this one has already had a sell signal this since last week. This WDC, Western Digital. So some of them are already a little under pressure. See, semis is here. Semi has a sell signal on the daily side, not here on the weekly side. It's gonna come, I think, next week. I have a feeling. See a swing high and swing low. It just sitting near 50% retracement now. So we'll see what happens. I'll be curious to see what next week opens. We'll find out Monday morning. Anyway, so Monday morning is very important. We have this earnings are coming, indexes are all over the freaking place. This is just up and down. This just, I don't know. This, there you go. You can see it here better. I mean, instead of Dow, we can make this thing as a semis, to be honest. Nobody cares about Dow. There you go. So we can keep an S&P, small caps, NDX, and semis, right? And you can see swing two, pink and pink, swing, ranking three and ranking three, all blue. The point that I'm trying to make here is this: 3 weeks of higher highs, 3 weeks of lower lows. Explain me that. 3 weeks of lower lows. How this thing is gonna work? Either there is a monster rip coming next week, but this has to lines up with this because this last 3 weeks of lows has just is you can see it. You see this line appears here. It doesn't have that. How are we gonna trade this? If anybody has an idea, let me know. Just have to be a you have to cherry pick. This is not a shotgun market. Been saying this for it's just rotation, structure. This is there you go. Yeah, this for me, this is down. This is down. The ranking changed right away. I can see it. Not three anymore. This week. Can next week survive up and then okay, well we're gonna see what happens. This is where we at. I cannot predict the next week or the week after or 2 weeks from now. Take it week by week, see how the price unfolds, and just go from there. Okay. Mixed market, I know. I highly suggest you just trade what I trade and try not to be a hero by yourself. Okay. So we have another half to go. Trade what I trade and just let me manage it and focus on those trades only. No need to swing trade, get super excited over a one pop during the day or pre-market move or something. Oh, this thing is going up. No. I watch everything. We trade what it pops on a scanner. If it's not gonna show up on a scanner, we're not trading at all. I opened up this thing yesterday. I bought shares. Um, what name? BCPC. So just a pattern. Nice round bottom, beautiful handle. Now Is the handle ends here? We're gonna find out. If it did, if this higher low here holds and the price managed to work its way out, the measured move is 200. Okay, so that's the pattern. Now we can make it a little more fancy with labeling. Same low, which is way down there. We're not using that low. So we have a clear 5 waves up. 1, 2, 3, 4, 5. That makes it 8. So within the 3, we have a clear 1, 2, 3, 4, 5. So we have all this. So we have 5 up. 1, 2, 7, 8.6. C. So we have C wave, 5 waves down in C. Right? So we have this low, swing high, higher low, right? So this one was near the 61.8, B versus A. Now from this low, we put up another 1, 2, 3, 4, 5. This is the swing, the wave 2 against this swing low. Higher low against this low, higher low against this low. You need to learn how to read a swing high and low. Once you identify it, that's when you will know, like, okay, when to trade. What we trade? We trade high or low. That's what we need. So this is where we are around this 50, 61.8. Last time 60, 61.8 happens here. Now pay attention to the second wave, how this stock trades when it comes down to a second wave after 5 waves. Watch this one. I'll just put a. There are a lot of techniques about Elliott because Elliott is very advanced. I don't. I can show you some things that you never heard. I've never seen them before. Um, small technique. See how I mean I don't have I used to do so fast. I just don't you gotta go through like just started learning through something new. That's enough. What you're gonna see here is this. You see this wave two? That's one higher degree against this low. Comes between this 50 and 61.8. You see this wave two come between 50, 61.8. See this wave two come between 50. This wave two. We're just trying to find twos between 50 and 61.8. And here comes another two. You know? So when a price will have multiple reaction once it reaches that zone, you kind of have to pay attention to it. Paying attention meaning that it constantly repeating, okay, of every higher low of the previous swing low and high. Okay, so those are your entry points. But you don't get to see it here, so you have to go back to the previous to see what the how the relationship looks like. See, the waves and the bars, they call bar to bar relationship. Bars and bar relationships are the same that swings has. One swing has lasted 5 days, 5 weeks, 17%. Right? So every swing, when you look at them, you always look at the time and the price. GAN is really good at it to identify these things, how long the swing lasted, how much it advanced to the upside. So then when you're looking at the higher low, then you need to see like, okay, what would is my retracement and how many days or weeks has been against the swing low and high. So you're calculating time and you're calculating price. Now this lower swing, higher low, usually should stay smaller in time and price. Okay? Meaning that if the initial swing lasted 5 days, your pullback should be at least minimum 2 days. Then from here, when you're looking for this swing to the upside, that should always be greater than more than 2 days. So I'm just gonna give you a rant like a example. I'm showing you some advanced stuff. It's gonna go over your head probably. Let's say you have initial swing here, which was 10% that lasted 7 days. So you have a swing low and you have a swing high. 10% rally for 7 days. Stock setback for three, call it 4 days. Now this pullback, which is your higher low swing, needs to stay less than 10%. Because if you're going to do 10%, then you're going to go right back all the way to the bottom, right? Call it like 30%, right? So you have a low, high, 10% rally, 7 days, setback for 3 days or 4 days for 30%. Now from here, because the direction of the swing and the trend is up anyways, now from here, when you try to catch this move up for a higher high, this move right there must be greater than 3 to 4. I will just use one. Let's use four. I have to confuse two numbers. It's four. This upside right there must be greater than 4. That's your time. Meaning bare minimum is only 4 days, then it has to exceed another one more day. It can go out, it can either exceed more, it can advance even more, it can go up to 10, 15, 30 days, who knows? But your upside right there must be greater than your previous swing low time and price. It must be more than 30% to the upside as well. So it has to exceed at least more than 30. I'll put 35 here. Then this number has to go 5. Now I'll show you a real example and then I'm going to shut it off. Let's say I can just pull up any chart. Let's do an S&P. So here's an S&P. Go back there. Yeah, let me show you this. Okay, where are we at now? So every time when you see a swing down, you're gonna see the upside. You see 7 swing high, that's the swing low, right? 7, 3, 7. So this move right there is running against this previous swing high, lower high. Every time when the number of bars get shorter with price and time, it will right away will tell you the price is losing momentum because it doesn't have enough speed now, right? Swing low, swing high, 6 days, 4 days, 6. See, 6 is greater than 4, 2.4 is greater than 1.7. Okay, swing low, swing high, higher low, higher highs. That's just sequence. Number of 4 days, it's just 1, 2, 3, 4. You see, that's your 4 days right there. These 4 days, it's just an now we just met side by side. Now we need to advance. Your upside cannot be shorter in time and price. If that happens, that's when the swing fails because it's losing momentum. When you losing, if you don't have speed to run, how are you gonna run? You're running out of breath or you're out of gas. And look what's happening right now. Okay, so we put an April low, sorry, March low. So we have from February all the way down here to March low was 32 days, 9.7% decline. So we have a 10% pullback right there. What market did for 32 days, 19% upside, 32, 32, because that was just bare minimum. The time, the price has already well exceeded more than 9.7 anyways, correct? Pull back in 3, 2.4, rallied 9 days, 3.9. Now you're gonna notice that your upside numbers are greater in time and price, right? And there's your high. That's your all-time, that's the all-time high now, right here, 76.60, which we all know. Here comes a 5 days setback of 5%, first initial swing low. That's the swing high, that's the swing low. Now what market did, rally back up 4 days against 5, stayed 4.7 against 5. So it was shorter on time and it was shorter on price as well. Took another rollover, right? So these 2 days right there showed that instead of going this way to exceed more on price and time, it went the other way. Because everywhere the day stops, the swing that you're currently in will stop right there as well. So it's calculating the time and price for you. It's telling you where you are at the close. So it rolls over again for 8 days. So now what happened is that it rallied down 8 and now it rallied 9 days as of yesterday. See, now it exceeded the time and price. 9 days against 8, 3.9 versus 3.7. So basically what it is this a full V-shaped reversal. There you go. So the point what it is here is that every dip is getting bought over and over again. There are more buyers in this market than a seller. And this is where we left yesterday at the close. Now the question is this. This is where the liquidity is sitting. To this swing high, to the all-time high. Oops. I'm gonna draw this box for you. Here. What you call liquidity zone. Now from here, okay, the daily swing is up. Do we advance and sweep this thing out? But this is where the sellers are sitting now because they're trying to defend this. If this thing slides through it, then it's gonna start getting more, number of more days, and the price will go against this. So you have all-time high, first initial swing, lower high, higher low. It's not a lower low. That's the problem because it didn't took out this low. See? It's higher low. Now we have a higher high by a penny. What? No, by 2 points. 75, 77.92 versus 75, 79.93. So it's like, whatever, less than 2 points. Because it has to try to exceed on this. Now we look at NDX, totally positive, it's opposite. All-time high, first initial swing low for 4 days, rallied up for 8 days. So basically it exceeded more in price and time. When number of days is 8 is double. 8.3 become 8.7, down 11. So here we haven't seen any 11 here since it's here. That's a big one. 6%. Percentage wise is shorter than this one and this one, but it took a lot of more time though. Now it's here. So it's basically a same like low, lower high. And this is a higher low. Now the question is the price can advance through here? So this is where the whole, we take this low to this. You see, it came right to the 7, 8 points, near the 7, I didn't touch it. See, it's just swing high, swing low. And now it's trying to make its way up. Now we throw the band, it's just literally shrinking. You know? So now whichever way you want to do it, want to make some, bring some of those fancy lines. You want to draw this. I don't know. It's just whatever you want to shape them. You know, like this. I mean, Technically, it looks like a contracting triangle. Contracting triangles are lower highs and higher lows, right? So like A, B, C, D, and E. So it goes like one, two, three, four, five. And then from here it goes. But the only question now is if this is a triangle, then where's the wave two? This? So we're looking at this. How that thing is gonna work, because I know with the wave one and two being like this and putting a three and four like this, Elliott wave has a very well-defined channeling technique that it uses using the wave two and four parallel the channel, and then you project it on the top of your third wave to gives you the target of a fifth wave. There's a very well-defined channeling technique that Elliott uses. If this is the case here, how we draw a channel using one and two? If this is this, you know, so not every, I'd rather do this. This makes much more sense and it looks right. This is then you cannot put a triangle here in a wave two as well either. Wave two cannot be a triangle. Triangles only forms in a wave four. You know, this thing right there is simply this. That's it. Or in order to go up, we just top right there, the band of the horse band, cycle band. Yeah, this is where it is. Look where the price stopped yesterday. Same thing with the S&P. See? You see the projection from very phasing. Here. You see there's a freaking dip coming, man, in this market. Then it rallies back up. This is where it is. So this is why I want to hold those ports for now. I can be wrong, which is fine. Nothing is gonna happen. I have plenty of time. We can get a nice flush for a week or so. We can cover those. I would have closed it. I looked at them up, and then when we got the day I put them on, the next day we got a sell off. Remember? Um, I didn't close it. I was like, okay, I gotta just put it on yesterday. I was like, I gotta give some room, and then market ended up starting to reverse back up. Yeah, it went all the way down to 740. So we'll see, because like look what market did here. Look at this dip. You see what market did? Made another V shape. You see grind for so many weeks until it rolled over. I mean, the only thing is like we're doing the same thing here, like this. That's the thing. But I just want to see. Yeah, I'll just wait. I'll wait. I'm not looking at all the way down here. I'm just trying to see if we can get back to the midpoint. That would be the mean reversion back here. So, yes, this one is 70 because it's about 71 is the mid. Yes. I don't know how much it can overshoot. That's my only thing is, if the price does manage to creeps up more higher, then this definitely the cycle has to shift up as well. You can't just have a price advance this. Yeah, you're gonna see the update for sure. The time is basically the goal is you have a price, you just put a blanket over it, you just stay okay, buddy, stay inside the tent. That's what it is. Any kind of a throwover is gonna met in a same throwover in the opposite direction. You know, so you have price and you have time wrapped around it, and you can kind of see like here how price is trying to show more strength to see if it can advance further, but at the same time cycle saying like just slow down, you're losing momentum now, right? Because the cycle here is sitting at 74.94. So now at the same time, you notice that how many times this price, the S&P is keep retesting 7,500 over and over again. Any dip comes in, 7,500. See? Every week, look at all these lows and look all these closes. The 7,500 is a major pivot point. The why this is a major pivot point, because there's two things aligns here. First, this is a cycle top on a weekly time frame. That's one thing. Second thing is this is a 127 extension of the yearly bar of 7,500. That's why the 7,500 is because it's starting to become very sticky level. Price advance comes back down to 75. I wouldn't be surprised the market retests another 7,500 soon. We think it's been doing since last month. The little blue line here, look how many times it crosses and touches every week. See that? First, second, third, fourth, fifth, sixth. So for 6 weeks in a row, you see markets keep. So it goes up, it can go up even more, whatever, and it comes back down again to retest 7,500 again. Because it's been doing it for 6 weeks. There's 1 month, 1 month to 2 weeks. So I watch these ones as just to see if how much of the price can advance to the upside. But you're not gonna go too far. If in order for you to exceed, the price has to make room to the upside. Fine, that considered as a throwover. But then the cycle has to update, and the weekly cycles don't move much. I can tell you that either. At the same time, they don't move much. They will shift really like a few points. That's the beauty of these cycles, though. They stay pretty firm. Daily will shift, you know, a little bit more. So you just kind of show like in the upper band comes down. It just you see the cycle here just literally just sideways as well. It's the pink, the magenta line. You see, monthly got a market's kind of it's due for this. So, I don't know. I was talking to this guy. I was like, Mo, what do you think the year will end? And I was like, if I have to make a call, I will say 7,000 because I think because as much technicals that I do every day and as much I pay attention to price and scanning and whatever, if some extreme volatility is going to spike in the market through a midterm election, you know? So this is the market is trying to show me that it will stay pretty firm throughout the year until the election time. The election time is where we're going to see a massive spike, the volatility spikes in the market. And then when that dip overs, that's the one that's the dip is gonna get bought for the new year. You know, market has room to run, but it needs is there is a setback is gonna come. So I cannot predict dates and stuff. I can just only show you what I see is what you can expect. Something is gonna happen here. This kind of a window. This window right there lines up with this midterm. Okay, so then from there it makes its way back up. So I don't know these trigger points or whatever, but uh, but we'll see. Just throw it out there for now, and you know, I will. I mean, I have signals and things like this. I will try to kind of keep a hedge on or something, But I mean, as you know, what I see based on it's not just one thing. I have several other charts that I already looked at them. Um, there's going to be a massive spike in volatility and through a midterm. Markets are already forward looking. So there's a run right now. It just so we're so selective because when you really look at the tape, it just I don't know. I haven't seen um this kind of a like a split market. You got, I mean, Netflix 29, 15, 6, 14, 13, 20% down. NVDA is up 13%. Yeah, it is. Yeah, 13.2. I was wondering, like, what the hell happened? 13, 14, 6, 5, technology 29, 23, 17, industrial 12. Because there's one thing that is is what I see is there is another energy spike is coming right there. This is monthly right there. This is the one that's going to define every cycle for you. Okay. We're in a tech run. Okay. There's no deny it. form, scan ratio, momentum is perfect. Look at this. A lot of people, meaning that a lot of institutes and a lot of hedge funds, they're hedged this market with energy. We had the initial pop when the war, whatever this Epstein war broke out, whatever, and now backed off. I mean, I'm looking at this actual rotate. This rotation which you see here is where the institute big money is positioned. I wouldn't like fine. We get the tech, right? This is the problem. If I would have to make a call, unless this thing goes this way, that's a different debate. But we're not, but we cannot say this because it hasn't made a curve yet. Look where this thing is pointing. Now the question is, if this enters a leadership phase, energy is gonna go through a freaking roof. So the last time, let me see.
Good morning, Mo.
Yo,
Institutions own energy as a hedge, but supposedly there's a lot of people short oil right now. There's been
yeah,
record shorts on it.
correct.
So, not tomorrow, but there, like what you're saying, there is fuel for the fire kind of thing.
Yeah, look at this. What I wanted to see is the last run, the last cycle the energy had was back here, back in 2021. 2021. This tail, which is red, has to turn blue, like this. Okay. Once it turns blue, that defines a well-established trend. That trend is going to break to the upside as a very high probability. This is the call it tier one phase that is pointing to enter toward the leadership phase. There you go. 2022 is what happened when you had a bear market, right? There you go. Because once you enter this, look, these institutes will press that hard as it possible. There goes 2023. The months are changing here. See, it comes down hard as well. See, it lost all its momentum because you see it went too close to the benchmark. Took off again. See, this is when the war broke right there. Right there. It was already pointing fucking in March aggressively to the upside. Look where it's sitting right now. The thing what I'm watching, because you have to understand one thing, that this thing updates month to month basis. It's not a weekly rotation. Weekly will shift every week. These are monthly. So they're like very, very slow. But your positioning is not, you're trying to play a monthly rotation. You don't trade based on 2 months buying options. That's just stupid. You are doing these hedges 6 months to 7, 8 months in advance, meaning further out. And if you manage to play out of one quarter or so, yeah, it's a hedge. It's a hedge is it stays for a certain time, and then if market condition changes or whatever, you just take the hedge off. So that's what they do. It just I'm doing the same thing as well. I am keeping a hedge, but I'm playing upside, as you can see that. I'm not opening shorts left and right. I'm keeping one thing. I was like, okay, leave the SPY open. I can I can do a Q, something else, but we'll play the upside. We'll play NVDA, we'll play 3Ms, and whatever shows up on a scanner. But in case, I just want to see how market will be managed with with the semis and tech swings which are down, how far the S&P is going to rally. That's the thing I want to see. So I'll find out. We'll find out actually. Materials, healthcare. So these three right there are the ones to look for in the coming months. Okay, technology, this is what it is right there. Defensive. Yes. I don't know, I mean, industrials, starting to loop. Let's see, financials, communication, consumer. This is where all the big players are. Top major banks: Google, Meta, Netflix, Amazon, Tesla. You know, look at the real estate. It's time to poke this defensive sector as well, consumer staples. So for now, I mean, this is a long way to go. Okay, this is not something that I hold some stocks based on tier one trades. It's just been riding those long term. Some of these stocks, they just to see if we can take a full complete circle would be beautiful. I mean, not all the way here, just something that moves like this. So, see financial and health. Okay, financial has already started looking promising because the earnings are coming out. And there you go. That's your number one sign right there, loss of momentum. No wonder the swing flipped on NDX. Weird. This thing has to line up straight for real. This otherwise is gonna become very difficult to trade. S&P up, small cap is up, NDX is down, semis are down. You can't trade like this. It's just a painful way to trade. Two swings down, two swings up. I mean, what do you think? I mean, other on first is either two things gonna happen. Okay, I know how swings reset. The two ways it happens is that they gotta rip right back up to the highs. Okay, then the swing will flip. Then they will all match, or this sucker is gonna back off along with this. Then from there, they make a move up. Just those are the two things gonna happen. They're gonna get lined up. I can guarantee you that for sure. You can't run a market like this. Either this rips, okay, or these these ones set back. This setback, this sets, but this one's already down anyways, and this is already down anyway. So these tools are already got their 3 weeks of lower lows. I This is what I cannot just I'm pointing the same thing out again. It's just I cannot. You have 3 weeks of lower lows and you have 3 weeks of higher highs. That's just tells you everything. Three highs, three lows, three lows. Just 3 weeks we're talking about. Next week is going to be 1 month. Something is not right. This market gets a good 5, 6, 7% shakeout. I think it's going to clear a lot of nonsense out of this market. Because I'm watching a bunch of things I'm not going to go through over here. This market needs some sort of a shakeout to reset this nonsense. That's all I wanted to say. This is not gonna. What the fuck is what is this? You can just look at this week alone. Forget about 3 weeks. This week, higher high, lower low, lower low with a doji, lower low. How this thing is getting so fueled? Like, how is this one is getting a gas, like pumping a gas here? The gas comes from here, from these two. We'll see. Just take it day by day for now. Just again, we'll press trades when market is more clear, makes sense. Right now, it absolutely doesn't make any sense at all. When you have lows like this, yeah, you don't ask me to update wave counts. It's how I'm gonna line them up. But they're both moving in the opposite direction. Look at the line. I'll already appear the line here. There's no line here. This is 15.6. This is 6.3. What is there? Nothing. All right. Let's call the show. Have a good day. It's 11:30 my time. Yeah, we gotta